Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with free air. There's no second best, okay?
GM. GM. So, trade of the day. It's a Sunday. Therefore, we're looking at a potential for BTC. Take some liquidity from before. All right, let me zoom in here. We'll look at the weekend that we had. We had a inside day on Saturday, very common, where you have a quiet day where not much happens, and we trade within Saturday's range. You've got Friday's high, which will have liquidity resting at it, and you've got Friday's low. So expectations from here, I would say more likely it's probably going to go and take the highs because of the upwards sloping structure and the fact that it continues to hold at the 4-hour EMAs and they're inflecting upwards. So in terms of day trades or positions, I would be hesitant to touch anything really until Saturday's high or Friday's high gets taken and or Saturday's low. You really don't want to mess around in this range because when you zoom it in further, it's really just grinding its way through and is not offering much in the way of actionable trades. Like you see this false breakout and is it going to drop back into the gap? Yeah, probably. But is that worth trading from 68.4 to 68.2? Absolutely not. There's nowhere near enough volatility in that range to provide any sort of meaningful positive risk reward to make it worth trading. So another thing to look at, if you remember from yesterday on the Bitcoin deep dive, I showed this analysis of Bitcoin's returns by the day of the month since 2014. So Bitcoin's historically strongest day of the entire month is the 20th. So over the last 10 years, the single day that has had the greatest price returns on BTC has been at 20th. However, the weakest period for the entire month then follows. From the 21st to the 25th, you have in total more cumulative downside movements, despite the 23rd having a little pop here. You're most likely to see some kind of pullback on BTC in the next few days. That's just probabilistically. Followed by a rally into the end of the month and into the start of the following month. So you can check that stream out to see in more depth what that means and why it happens and my theory behind it. But essentially, it does not mean that you get long on the 20th and then you short the 21st until the 25th and then you just get fucking max long. If we do see some kind of pullback in 21st, 22nd, 23rd, and the market starts to show strength at the end of that, which would be next Friday, the market starts to show strength near the end of this week coming and starts to move higher, that final period of each month, that end part of the month, is definitely somewhere that you can see good dips to buy if price action agrees, and a strong move into the end of the month / the start of next month. So we've had a good October overall. We had our down move at the beginning. We've had a nice move higher. It is rounding out, talked about at daily levels. This is not impulsive, strong trend structure that you would like to see. So if we drop back and price holds, if we do drop back in the next few days and price holds in one of these tight consolidations and then starts to break upwards from it, I think that will take us towards 70, probably with a strong end to the month as the front running flows come in once again. Something similar happened last month where we got middle of the month, we had a strong move. Got to the 21st, 2nd, 3rd, 4th, we chopped around. Then we had a rally off the 26th, 27th, 28th, got a little pop into the end of the month. That's the kind of thing I'm looking at. Obviously that reversed, as it can. It doesn't mean it has to continue into the following month. But I would say dips this week, this is kind of the takeaway. Any dip this week that holds and shows lower time frame signs of reaccumulation, market structure breaks back to the bullish side, strength, is a buy. And so that's what I'll be watching for. Today, why does the 20th have the biggest day, followed by the 21st with the biggest? Why does the 20th have the biggest green returns, followed by the 21st with the biggest red returns? That would tell me that there's a greater tendency for the moves that happen on the 20th to actually not have follow through and reverse the next day. You can see they're roughly equal. It's about 0.8 or 9 on average percent return across a 20th, and about 0.8 of a negative return the very next day. So it seems to me like there's probably plenty of examples in the past where the 20th is green and the 21st is, the 20th is green and the 21st is red, and it just fully retraces. Since this is a Sunday, that is kind of interesting, because we do see a tendency as well for these Sunday pumps to happen, to take out the highs, and then it reverses back down on Monday. So I'll be watching for that. Again, you do not trade any of this predictively. If that move happens and you see a trigger to actually enter a trade on your price action based systems, meaning if we were to pump today and show some sign of reversal, you'd have greater confluence into a short, because the 21st, 22nd, 23rd can be a weak period. Yeah. So that's what we're looking at. GM. See you later at 4 p.m. UTC, the regular time. We will do weekly outlook, looking ahead at the week to come.